let us begin the session now. So, this is our 17th Stock Talk episode, and we are glad to have you all joining in with us today. So, just to give a brief about Stock Talk, it is basically a discussion that we have with the investors regarding multiple topics that might be relevant to the stock market. So, through this, we are just hoping to discuss with investors as well as to give an update in terms of what's happening in the market and any relevant topics that might influence the market performance or uh, a broader sense of the stock market. So, this is more or less something that we are trying to have as a session between the stakeholders from and uh, as well as our team from First Capital. So today, specifically, we have chosen a topic um, that is key to the ongoing performance of the stock market. So we are here to discuss the emerging trends in the stock market. So the reason as to why we have chosen this particular topic is that we have seen the performance of the stock market in the past few weeks, and we have seen the ASPI reaching record highs as well, and we have seen turnover levels picking up as well. So we want to discuss what are the factors that have been driving this, and is this sustainable or is this something that we need to look into going forward? So these are the aspects that we are hoping to discuss today. So without further ado, we could start off today's session. And before we start off, I would like to introduce Yudheshan as well. So Yudheshan is from the broker side of, he's our senior, he's an executive investment advisor. So we're glad to welcome Yudheshan as well. Yes. So with that, we could start off the presentation. Yes. So as I mentioned, why we chose this topic today is because we have seen the ASPI rallying over the past few months. So at present, the ASPI is at around 25% up year to date. So from the beginning of this year to this particular point, the ASPI has risen by about 25%. And we have also seen market activity pick up. So in fact, last week the ASPI surpassed the 20,000 mark that we were looking for, and also market activity, as I mentioned, has been picking up. And over the past few months, we have seen turnover levels of about 6 to 7 billion rupees, whereas before, I mean, few months back, we noticed it was around maybe 4 to 5 billion. So this particular rally and this increase in activity is why we decided to discuss this particular topic today. So firstly, I would like to take you all through a few reasons, the few key reasons that have been driving the ASPI over the past few months and particularly the past few weeks where we have seen um, record highs being registered by the ASPI. So to start off with, we have listed a few key drivers. So firstly, the strong earnings of listed corporates. So as we have all noticed, most of the companies, almost all of the listed corporates, recorded their the June 2025 quarterly results over the past couple of weeks. And we have seen all of these corporates registering, most of these corporates registering strong growth in terms of their earnings. Um, Particularly, we could see some of the sectors, specifically the banking sector stocks, the food, beverage, and tobacco stocks, and also capital goods. So these are certain sectors that have been, registering strong earnings. And also, if we look at corporate earnings growth, we have actually seen growth in terms of the past 6 quarters. This is not really the first quarter. So this consistency in terms of earnings growth is also one of the reasons why investors have been attracted towards the equity market. And there are a few reasons which have been driving this particular earnings growth in terms of the listed companies, which we will be discussing shortly. And another reason is the improvement in key macroeconomic conditions and indicators. So, as we have noticed, we have some of the key indicators, specifically the interest rates, the inflation, and also the balance of payment and foreign reserves. These are indicators which we have been monitoring over time. And we have seen some improvement and stability in terms of these indicators, which have sort of which have sort of influenced the overall macroeconomic stability. So, for example, if we look at interest rates, uh, we have been uh, we have been seeing that the interest rates have been set at quite a lower regime. So, through this lower interest rate, it has actually influenced the market performance in multiple ways. So, for example, interest rates being low has actually caused the financial cost of companies to come down, and also it has also sort of attracted investors to shift from different asset classes towards equity markets. And also there are other multiple factors which we will be discussing shortly as well. And inflation is another key factor that has sort of brought in stability towards the macroeconomy. So we have seen that inflation has actually been at quite a deflationary rate and is slightly picking up now. But since late 2024, actually inflation has remained quite low. And now with certain initiatives such as the reversal in electricity tariffs, we see a slight pickup in terms of inflation, which is still, although hovering at lower rates. So this lower inflation has also sort of brought in some kind of stability in terms of the macroeconomy, and that has also helped towards the ASPI's drive. And also, when we look at the balance of payments, so these are simply, I'm discussing the macroeconomic factors which have sort of influenced the ASPI's performance. So, when we look at the balance of payment, also we see a recovery in terms of earnings from tourism as well as worker remittances. So, these factors have also helped in maintaining a stable surplus in terms of the balance of payment. And also, we are expecting this to continue in the upcoming years as well. And then we have the foreign reserves, which is also currently above 6 billion, around 6 billion range. And this is also being supported by government initiatives as well as the IMF agreements. So these are factors which are sort of stabilizing or keeping our external sector stable. So these are factors overall which have sort of built our macro economy and which has helped in building investor confidence as a whole. And that is why we see the ASPI being driven by these economic indicators. And also, in addition to that, we have the recovery in terms of key business segments. So we have the um, tourism sector, which is almost picking up. So for Sri Lanka, tourism is, as we all know, very important in terms of getting foreign currency in and also remittances. So when we look at tourism, we are almost seeing tourist arrivals nearing, almost reaching pre 2018 levels actually. And we at First Capital are actually hoping tourist arrivals to reach about 2.5 million for this year. So these are positives when we look at the economy, and we are expecting earnings also to rise from that end. And construction is another sector which is gradually picking up with the developments in the economy, and also with interest rates being low and helping towards credit growth and in terms of developing projects as well. So, in addition to that, the relaxation of import restriction and resumption of import businesses is also something that has been helping the overall macroeconomic situation in the country. So apart from these, we have a few other external other factors which have been actually supporting investor confidence in terms of boosting investor confidence. So one is the political stability. So in Sri Lanka, most recently within the last couple of years or so, we have had elections, and particularly the last year, so we have had the major elections in which the governing party has been able to successfully sort of register or show their majority. So this is also, when there is political stability, it actually gives somewhat a direction to investors, and also helps in developing investor confidence towards this particular direction. So that is also something that's ongoing in Sri Lanka, with the government able to win some of the elections, some of the key elections. They've been able to set a clear direction for, let's say, the next 4 or 5 years. It kind of shows some direction. So that is also one of the reasons that has been able to successfully bring in investor confidence and drive the ASPI. And in addition to that, some of the other factors that have supported the ASPI's performance over the past few months is the continued agreements with the IMF, the completion of debt restructuring, mainly in December 2024, and also the shift between treasury to equity markets. So that is with the lower interest rates, with the investors moving towards equity markets as well. So this is just a basic description of the factors that have actually supported the performance of the ASPI over the past few months. So next, we could just Yes, we could just looking into this slide. So why we have taken this slide is mainly so we discussed the factors that have been influencing the ASPI's performance. And this is from the macroeconomic side. We're trying to discuss the performance of certain indicators and how they have supported and what we are expecting in terms of these indicators going forward. So firstly, when we look at the GDP growth of Sri Lanka, so in 2024, the GDP rose to about 5%. GDP growth was registered at 5%. So this 5% was registered after consecutive decreases in 2022 and 2023. After the economic crisis and COVID, so that particular period was impacted by dips. And however, now the GDP growth was in 2024 registered at 5%. And also, moving on to 2025, also we have similar expectations for the GDP growth, and we're expecting around 4 to 5% is what we're expecting at present for GDP growth. And however, this growth is likely to somewhat taper down for 2026 and 2027. So the reason being, we believe that the government spending is not up to mark as to what we were expecting. So, and also some of the global events which has sort of resulted in the overall global economic slowdown are factors which we believe could influence or influence in tapering down the growth to about 3 to 4% is what we're expecting for 2026 and 2027. So although we do see a growth trajectory, there's what we're expecting is a slight slowdown when it comes to 2026 and 2027. Um, yeah, moving forward, so the reasons, as we discussed earlier, for the growth that we are expecting is mainly one of the key reasons is the inflation, the lower inflation levels that we have seen in the previous few months. So if you could see in this graph, we see how from a deflationary point, we are gradually picking up. And what we are expecting is from August onwards, we're expecting a slight inflationary level coming in. And also, this is mainly due to the base effect impact coming from when in Sri Lanka faced with deflations in late 2024. And also, in addition to that, a gradual pickup in terms of consumer spending is also likely to cause inflation to gradually pick up. And we expect that inflation levels might reach the CBSL target of 5%, although it might not happen immediately in 2025. So our target is as of 2026, gradually the country might reach that level of inflation. So this is expected to be driven by increase in consumer spending as well as increased activity. So this is what we believe is so the stable inflation levels is also one thing that has supported economic growth and has also sort of increased economic activity in the country. And yeah. So another factor that has sort of seen that has actually supported growth in terms of the country is the increase in consumption, which has been driven by budgetary measures. So specifically in order to drive disposable income. So consumer spending is heavily reliant. We all know that it's heavily reliant on disposable income. So with the introduction of certain initiatives to the budget last year, the government has been able to increase the salaries of the employees from the government as well as the private sector. So we had the ASVA program, the public sector salary increment. So to increase the basic salary up to 15,750 rupees, and also private sector salary increment from a minimum of 21,000 rupees to 27,000 rupees. So these initiatives have actually sort of resulted in an increase in terms of consumer spending, and it's actually we have seen a slight pickup in terms of consumer spending through these initiatives. So the other factor is the sustained low interest rates, which we expect to also sort of which has sort of helped the economic activity and growth, and also which is sort of likely to contribute further towards growth in terms of private sector credit and also the economic activity. So what we have seen is that the AWPR has actually decrease. As we have noticed in the past few months, we have been seeing a downturn in terms of interest rates. And this has actually been lower than what we expected. And also specifically, if we look at the central bank policy rates, so in May 2025, we had a downward revision by about 25 basis points. And in the following meeting rates were maintained at 7.75. So what we believe would be next is that these rates are expected to somewhat stabilize, although we expect at least one more policy rate cut coming in the next few months. So this rate cuts actually induce growth. So with the reduction in rates, we could see a pickup in terms of loan growth, and also which sort of private sector credit growth is expected to grow. So we actually expect a growth of about 15% in terms of private sector credit growth, and this trickles down into more borrowings towards increased activities, or like loans for construction, personal loans for development activities. So this is what is likely to drive economic growth. However, with the increase with the increase in demand, we also expect the rates to somewhat stabilize in the 8 to 9% when it comes to the first half of 2026. And this is also due to an increase in terms of state credit, which we have been noticing in the last couple of months, where there is a gradual pickup in terms of state credit as well. And along with that, the ongoing private sector credit growth. So if we look at the private sector credit growth, we have even looked at some of the banks that have more recently reported their earnings. We do see a steady increase, actually a significant increase to be fair, in terms of the loan growth. So these factors are actually what have sort of supported sort of the growth in terms of the banking sector. But however, in terms of the interest rates, so we see that the AWPR could also stabilize in the range of 8 to 9% when it comes to, so gradually pick up to 8 to 9% from where it is currently at the 7.75 range. So it could 7.5 to 8.5 for what we expect for 2025 end, to gradually pick up to 8 to 9% when it comes to the first half of 2026. And moving on, so why we have taken the PMI is just to show how the indicators have been in terms of the Purchasing Managers Index. So here we cover three sub-segments, that is the manufacturing, services, and construction. So here again, we have seen an expansion when it comes to all the three sub-segments. However, what we expect going forward is, again, we are expecting a slight slowdown, although here we do see promising prospects. We do expect a slight slowdown due to sort of a lower than anticipated consumption and consumer spending, which is likely to be burdened by higher taxes. So we have taxes which are sort of burdening consumer spending. And also, as I mentioned previously, we have the government capex, which has been a little lower in terms of government spending. So this is also somewhat lower to sort of induce further growth. So that is why we're expecting a slight slowdown when it comes to the later years. So when we look at like 2026, 2027 is when we are expecting these to sort of slow down activity for Sri Lanka's economy. And Yes, so next up, we will be discussing the valuations, which sort of is important when we gauge the performance and what we are expecting next in terms of the equity market. So when we look at our predictions, so for at First Capital, we're expecting corporate earnings growth to reach about 25% in 2025 and 17% year-over-year growth in 2026. So if we look at the recent performance of companies, so as I mentioned earlier, we have already seen 6 consecutive quarters of growth, and this is the seventh quarter that we are looking at, and we're also expecting earnings growth in this quarter as well. So if we look at the key drivers for these earnings growth, one would be the banking sector. So when we look at the banking sector, we have seen interest rates which have remained low, and it has sort of in terms of net interest income, so some of the banks have actually benefited from lower interest expenses, and with the loan growth they have been able to get higher net interest income as well. So net interest income uh, has been benefiting for for most of the key banks, although some of the banks have been impacted due to lower interest income. So mostly the banks have benefited from this, and in addition to that, banks have also seen lower impairment charges with the overall recovery in the economy. So the impairment charges have gone down. And another key factor that has been driving the earnings of banks is the fee and commission income. So with the increase in digital card transactions as well as, digital transactions as well as card transactions, and also with the opening of free trade, and we have seen the relaxation of vehicle imports. So all of these factors have sort of helped in terms of the earnings of banks with the loan growth coming in. So this is one of the key factors that is likely to, the banking sector is one of the key sectors that is likely to drive earnings in terms of the listed corporates. And also another sector we have is the food, beverage, and tobacco sector. So overall, food, beverage, and tobacco sector is also with the we have seen finance costs coming lower for these sectors, and also from consumer perspective, we have seen disposable incomes picking up. So this is also something that has benefited the food, beverage, and tobacco sectors. So in addition to this, we do also have going forward, we do have earnings from capital goods sector, specifically looking at stocks such as John Keells. We do see some of their major investments which are expected to yield results going forward. So when we look at conglomerates like John Keells, we know that the changes in such companies could impact corporate earnings significantly. So um, this is also something that we could like sort of look forward to going forward. And so, as I mentioned, in 2026, we're expecting earnings growth of 17%, specifically to be driven. So, like as mentioned, in addition to the banking sector, the food, beverage, and tobacco, as well as capital goods, the overall corporate earnings are likely to benefit from reduced financial costs, and as well as pick up in overall economic activity, and in terms of factories and manufacturing companies, it could also mean higher utilization levels. So these are in addition to capacity increasing capacity expansions as well. So these are factors which could actually drive earnings of the overall market going forward. And so here, this slide actually shows in terms of investors what are the available asset classes. So we do have a number of asset classes when we look at the Sri Lankan capital market. So we do have investors can either go into equity or debt. So within that, we have multiple asset classes. So when we look at the equity market specifically, it has benefited from the prevailing low interest rates. So with the low interest rates, what happens is government securities and similar asset classes may look less attractive because investors always go for where the higher returns are, where the higher yields are. So with the fixed income market looking slightly less attractive, it gives, and given the lower interest rate environment, this gives more space for the equity market to sort of pick up and attract more investors. So we have actually noticed a gradual shift from the fixed income market towards the equity market. So this is also one of the factors that has sort of driven the ASPI, with the interest, with more investors moving towards the equity market due to its attractiveness over the past few months. So as we could see in this, we could see the ASPI's rally in the past few months and how it has picked up. So we have also seen significantly higher turnover levels as well. So specifically, if we look at the last month alone, the average turnover is around 6.5 billion rupees. This is quite high compared to what the CSC has seen in the historically. So this momentum seems to be continuing. It's not like very inconsistent. They have been able to maintain this at a consistent level. So these are factors which have sort of attracted investors towards the equity market. And yes, so currently we see the ASPI is trading at a PE of 9.5 times and a PB price to book value of 1.4 times. So so in terms of our expectations, we have set for 2026, we have the ASPI target of 21,000 to 22,000. So for 2025, we had expectations from 18,000 to 19,000. But now, given the rally that we have seen, we believe the ASPI will be able to reach our 2026 target even before the end of this year. So the ASPI's performance has been driven by all the factors that we have been discussing so far. And the target, although we are maintaining our target for 2026, we could see that it could be reached even before that, given the current rally that we see. So as we mentioned, the rising profits for 2026, the rising profits combined with the lower interest rates are some of the key factors which might lead to a re-rating of the ASPI. So just in terms of the lower interest rates, so we expect, as I mentioned, the lower interest rates are expected to continue for some time, and it might gradually pick up when it comes to the first half of 2026. And also, as I mentioned earlier, given the the attractiveness of the equity market when the interest rates are declining, this could also bring in more investors towards the equity market. And if we look at the earnings momentum, that the current ongoing momentum of the earnings, we are expecting this to actually continue going forward, if not be actually stronger going forward, with the banking sector, food, beverage, and tobacco sectors performing well. And as I mentioned, John Keel's Holdings also with its key projects coming into play, with the City of Dreams project coming in, the West Container Terminal project. So these are some of the projects which might see results coming in going forward. And also, in addition to this, for all the other companies listed in the CSC, we believe earnings growth will come in given the pickup in business activities and also improved demand, factory utilization, and also financial cost savings with the lower interest rates. So these are factors which could actually influence or like help in the earnings momentum to continue in the upcoming quarters as well. And with that, we see the CSC's discount. So currently, with the CSC trading at 9.5, we still see there's space, given that the CSC has historically traded at around 12 times. And currently, this 9.5 is still, so the CSC is still trading at a discount to what it has been historically. So we still see there is scope for the CSC, for the ASPI, and we expect that it could re-rate to about 10 times. And this is not a definitive number, but however, with the earnings performance and with the overall market performance, we believe there is still space for there's still space, and that currently the SPI is trading at a discount. And also, in terms of the market re-rating, so what we have is that we are looking at all the macroeconomic factors also that would influence. So that is the reason as to why we discuss the macroeconomic factors that influence the ASPI's performance. So we are expecting earnings to remain strong with, as I mentioned, 25% growth in this year and also 17% for next year. So this is likely to contribute towards bringing in investor confidence. And also, if the macroeconomic conditions remain intact, there is definitely more scope for the ASPI to continue with its strong performance. And we will be monitoring our targets as well. But the 21,000 to 22,000 target set for 2026 could be reached well within this year as well, given the ongoing performance of the ASPI. So yes, so with that, we come towards the end of our presentation. So I hope we've been able to explain a few things regarding the ongoing trends within the market. And yes, with that, we could open the floor for questions. Yes, so let me start off with this question. I think, Yudheshan, I guess you will be able to answer this question. So this is in line with, yeah, so the question says, since you interact with a diverse range of stock market stakeholders, could you share a perspective on the overall investor sentiment in the market? So I think it's more in line with what we have been seeing in the past few months. So what sort of sentiment have you been seeing is the question.
Yeah. So, good afternoon, everyone. So, basically, if you look at, there has been a lot of cash inflows into the market. So, it can be clearly seen in the turnover levels. So, turnover levels, even today, it was around 10 billion rupees. So, whereas probably a few months ago, it was around 5, 6 billion. So, personally, even most of my clients are putting in more money. So mainly due to the low interest rates which they are getting from the FDs and the fixed income securities. Plus, they get charged with taxes as well. So there's a withholding tax of 14, 15% on that as well. So whereas in the stock market, there's no taxes, there's no capital gain tax. And also they could, with the rally of the market, they could get a higher return than what they are currently getting in a fixed income securities. Plus, most of the investors they're going for margin facilities as well. So due to the low interest rates, so the margin providers are providing almost like around interest rates for loans for around 10-12% of interest rates, right? So therefore, they actually take a loan out of their portfolios and invest in the market. So from that angle as well, there's a lot of money coming in. So those are the reasons mainly for the market to push up the shares for their to match their earnings.
Right. Yeah, understood, Yudheshan. So yeah, so then we have a question in terms of the banking sector. So what is the forecast on finance and banking sector? Are you forecasting further increase? So as we mentioned earlier, what we're looking at in terms of the banking sector is if you had seen the recent performance of most of the key banks, we have seen there's this like strong loan growth, which is expected to sort of continue within this lower interest rate regime. So, as I mentioned, there are three key factors which have been driving the earnings when it comes to banking sector stocks. So, one is the lower interest rates, and secondly, the rise in fee and commission income, and then we have the lower impairments. So, if we look at these three factors, so when we look at the lower interest rate environment supporting loan growth, we're expecting this could continue with in addition also with along with the rise in economic activity. So with that, with the loan growth expectation intact, and also with the lower impairments and the rise in fee and commission income, we believe that the performance of banking sector stocks would continue in terms of their earnings growth. We could expect them to maintain this momentum. And with the easing, so we are expecting an easing in the sense we're expecting interest rates to sort of gradually pick up towards the second half of 2026. So until such time, there is going to be loan growth, and even after that, so for 2026, we're expecting loan growth to private sector credit growth to be around 12%. So we believe that the banking sector is well positioned to sort of you know, uh, benefit from this environment, and also with the overall pickup in activity in the economy, we're expecting that they should be able to maintain this momentum going forward as well. Uh, then, yes, we have another question in terms of, yeah, so Yudheshan, I guess I could direct this question to you as well. How sensitive is the market to negative news? So I believe this is more in reference to what has been, what is being noted, what has been seen in the past few months. So we, I guess, looking at the tariffs that have been imposed and also the overall global tensions that we have witnessed. So I think it's something in reference to that. So yeah, how does the market? I think it says yes. Uh, yeah, how sensitive is the market to negative news? Yeah.
Yeah. So basically, if you look at the day which the tariff news came, so when we got charged by tariffs, so that day the market wasn't that actually negative. It was really positive, right? So it's more of the valuations of the market. So basically, we'll say external news came in. So it's actually depends on at what value is the market is. So is it like undervalued? Is it overvalued? Those kind of impact. So so last time when the tariff news came, it actually was undervalued. So that's why it didn't react in a big way. So it didn't have a big impact on the company earnings, overall company earnings, as well as the market as well. So whereas we'll say in the future, when the market gets overvalued, we'll say when the PE goes to about 12 times and probably a external negative news comes in, then it could have an impact because market is overvalued and probably it has to come down a bit more. So I think more than it's kind of the negative news which is coming in, it actually depends on the valuations of the market as well.
Right, Yudheshan. Okay, yeah. So, yeah, we have a few more questions lined up. So yes, one question is on the sector recommendations. So, any sector recommendations? So, yes, as we have been discussing, the sector recommendations, we have the banking sector stocks. So, we are quite positive in terms of the banking sector, as I mentioned previously also. And the other sectors that we are keeping an eye on is the diversified financial sector as well. So the diversified financial sector is also reflecting a similar stance to the banking sector, and especially for the diversified financials companies, some of the finance companies that we see, it's mainly with the relaxation of import bans on vehicles. So that has resulted in a pickup in terms of LCs, and also reflecting in terms of earnings for these companies as well. So we have the banking sector stocks, diversified financials, and we also are quite positive in terms of consumer sector stocks as well. And we have the food, beverage, and tobacco sector. So these are stocks which sort of reflect the overall pickup in terms of the whole economy with the increase in disposable incomes, the reduction in financial costs. So these are sectors which could be interesting to, and which could actually benefit in the upcoming quarters. And also, we do see a slight pickup in terms of construction activity, which would also sort of benefit construction sector stocks as well. But upfront, we are quite positive in terms of the banking sector stocks, diversified financials, food, beverage, and tobacco, as well as in terms of capital goods. Also, we have JKH, which we are also looking at with the upcoming projects, which could uh, result in good earnings for the company as well. Yes. So then also there's another question in terms of what is the reason for the banking sector, financial sector shows a growth in share price. So this also is more in line with the overall sentiment that investors have been reflecting for into, I mean, have been sort of seen in terms of the banking sector. The positive, the confidence is what reflects, I mean, is reflected in terms of the share price. So when investors sort of are positive in terms of company earnings, they try to, and they see that the company is actually currently trading at a discount. That is when investors tend to go and buy these stocks. So when there is higher demand, obviously the price starts to pick up. And that is why we see an increase in terms of the pricing of this, the pricing of the banking sector stocks. So that is why we have recently seen some of the price increases along with the positive earnings that have been recorded by these companies as well. Um, yes. Then we have this question. Yeah. So Yudheshan, I guess I can direct this question to you. With this all-time high ASPI, most of the stocks are overvalued at the moment. Do you think this will come to a market correction soon, or will this rally go through further?
So basically, yes. So there are lead stocks in the market. So even what our research recommends, most of the stocks have achieved its target prices, and we have put a hold on those stocks as well. So, but as well, but in terms of overall market, we see there is a bit more room to go up because the PE of the market is a bit low to what it is. So, based on our expectations, we are doing it in a most conservative basis, right? So the 22,021 to 22,000 ASP is also a bit of a conservative level expectation. So what we think is, yes, there are stocks which have been overvalued in the market, but the overall market is kind of there's a more potential to go up.
Right. Understood, Vidisha. So, yeah, let me just save off another question here. Um, yeah, so there is a question in terms of the upcoming policy meeting. So what is expected in the upcoming policy meeting? So yes, so in terms of interest rates, also like what I mentioned, so the interest rates is something that is being um, the central bank's decisions in terms of the interest rates are taken based on the ongoing inflation level and what is the level of growth that has been achieved by the country so far. So currently, the central bank at its policy meeting in July, they indicated that they wanted to maintain rates since they believe that the current ongoing inflation levels will help them reach the growth targets that they have set. So in terms of our expectations, we are definitely not expecting any sort of policy rate increments in the near term. If at all, there could be a decline of about 25 basis points, as I mentioned earlier, within the next half. But we do not know if it is the next policy meeting. They could actually maintain it and then revise it again. So, but we're definitely not expecting any increments. If at all, there would be at least about one uh, rate cut in within the next half, and mostly the rates will be, if not, it will be maintained. But for the full year, we are expecting at least one more rate cut to come in. Um, yeah. Um, okay, so let me take up this question for you, Yudheshan. So, yes, so the market has nearly doubled since September last year. Could you share some insight into which types of investors have driven this growth? Has it been retail or institutional participation? And are they investing with a short-term outlook or a long-term perspective?
Yeah. So Shahana, if you look at since last September, the most sectors which contributed for the ASPI are the banking sector and the non-bank financial institutions. So banking counters are the blue chip counters in the market. So they are like literally a liquid stock. So their most of the prices are really high market cap. So I don't believe the retailers could alone buy and push the share prices to really high levels. So obviously, its institutional participation is really high in those stocks, whereas they have support from retailers as well. So in addition to that, if you look at in the last 2 to 3 quarters, the top 20 shareholders of most of the bank, there has been drastic changes. So whereas the institutions are taking like a big stake uh, in their portfolios in banking sector. So so person who institution which invests billions of rupees in a one stock and takes probably 5% or 10% of the company's full holding, they probably have a long-term vision rather than a short-term trading vision, right? So what we believe is the market has been mostly driven by institutional, and there could be very in the near term, since it is kind of institutional and long-term view buy, there could be less selling coming in the near future. So, but obviously, if something happens, the panic selling could come in. But even though the panic selling comes in, the institution will back up probably when the prices come to their buying levels. So mostly it's institutions plus with the support of retailers as well.
Right, Yudheshan. Yeah, understood. So yes, I guess we could take a couple more questions. Yeah. Yeah, so this question is more in terms of the inflation side. So if inflation begins to rise, how is it likely to affect corporate earnings? So yes, we've been saying that the lower inflation levels have sort of helped in the stability of the economy. So when if inflation gradually when it picks up, immediately there could be a slight impact in terms of the rise in commodity prices, and there could be a slight impact when it comes to margins as well. So there could be in terms of a slight impact in terms of margins. So specifically, if we look at sectors such as consumer goods and manufacturing, this is more of a direct impact. And but actually, we could, if we look at certain industries like banking, they might actually benefit from inflation if it leads to sort of a high interest rate and improved lending margins. So overall, but depending on the level of inflation, if it goes beyond a certain point, but we're not expecting such inflation levels in the near term for Sri Lanka. So when there is an overall sudden increase to greater levels, that is when overall consumer demand could be impacted, and also higher borrowing costs could also sort of limit loan growth, and such impacts could trickle down to a contraction in earnings. But however, right now we're not expecting any such major increases. We are expecting a gradual pickup in terms of inflation, which might not have a major impact or might not significantly affect market performance. Um, yes, I guess we could. Uh, Yes. So again, I guess I could direct this question to you, Yudheshan. What is the advice for new stock market joiners?
Okay. So in terms of new stock market joiners, I would say they have to, first of all, this is kind of a slow process, right? So I think if you are entering the stock market, it should be a long-term view. So probably you have to enter the market with the plan of doing it for, for your probably for your lifetime. So whereas you start learning slowly. So stock market is, in order to learn the stock market, you cannot like fully learn it from a book or probably a course. So it is kind of a experience, it's a learning from an experience. So the best thing is to start up an account, a CDS account, invest a small amount, uh, refer to the research reports of the research firms, and get an idea what kind of the basic ideas of what kind of companies are there, what kind of valuations they do, what are basically the jargons, what the research firms and the research reports, what kind of jargons they use and what do they mean. So once you get an idea of it, you could basically make good decisions out of your investments, and structure the portfolio in the way that is a bit low risk and kind of make a good return as well. So the best option is to start learning, then slowly with confidence increase the amount you're investing. Yeah.
Yes. Thank you, Yudheshan. So I guess we could just take up one more question finally, which would be yes. So I'll just take this question. Hospitality sector still remains below the bar, though tourism is booming up. So yes, so to answer that question, we do see a rise in tourism numbers, and as I mentioned earlier, we are expecting 2.5 million tourist arrivals for the end of this year. But the reason why we don't really see that being reflected in terms of hotel sector companies or in terms of yeah, the listed players is mainly because when we look at Sri Lanka, one of the issues we have had is that most of the times, the tourist arrivals, the demographics of the tourists that who visit Sri Lanka are mainly have been budget travelers. So Sri Lanka has mainly been a destination for its beaches or its natural beauty, and it's not mainly, so the tourists, the demographics doesn't reflect tourists who sort of spend more. The average spend per night is not too high. So they are mostly budget travelers, and they mainly look at unregistered establishments. So this has been a continuous issue for the Sri Lankan tourism sector, although now there are initiatives which are being taken to sort of decrease the impact of this, or like there are developments which have been sort of taken to sort of curtail this issue. So currently, the reason why it's not being reflected is because mainly the tourists who visit Sri Lanka, mostly they might, they spend the day in terms of at establishments which may not have been registered. So unregistered establishments is one of the key reasons why it's not reflected. And also, if we look at Sri Lanka, the specific segments. So now we have the City of Dreams establishment, but mostly we have the casino coming into play as well, but mostly it has been towards the towards the establishments which are away from Colombo, or mostly in terms of resorts and budget establishments, and not necessarily the key listed players which tourists go for. So this is one of the reasons, sort of a mismatch that we have seen. But now, I guess we have seen some of the initiatives coming in, and certain the government policies which have been taken to sort of minimize this. So going forward, we could hope that this will gradually change and benefit the sector and the overall earnings of listed players, and the corporate and the overall market performance as well would benefit from this as well. So, yes, I guess we have answered most of the questions that have been asked from us, and I hope this has been an interactive session, and hope we were able to help the investors with their questions. So, Yudheshan, do you have any words to say that so that we can wind up the session with your words?
Uh, Nothing much. Yeah.
Okay. Yes. So with that, I think we've come to the end of the 17th episode of Stock Talk. So we're always willing to help you, and you could always connect with us through our social media platforms as well as our WhatsApp channels, and we'll be glad to help all of you. So thank you, and we wish you all a pleasant evening. Thank you.